Welcome to the Case Study Learning Series in International Business by Skilled MBA. This session presents an analytical exploration of Saurios, a Colombian startup specializing in spectacled caiman leather and meat products. With limited domestic market growth, Saurios is compelled to go global. We'll examine their product potential, evaluate international opportunities, assess entry strategies, and outline a phased roadmap to establish sustainable international operations. Through this case, we'll uncover the nuanced decision-making behind entering complex, high-potential markets. Founded by Juan Manuel and his partner Jorge, Saurios is a Colombian enterprise focused on ethically producing high-quality caiman leather and meat. While the team possesses deep technical and operational expertise, their international business experience is limited. Recognizing the constrained potential of Colombia's domestic demand for exotic goods, they have prioritized internationalization as a survival strategy. They are now exploring how to best penetrate foreign markets with culturally sensitive, regulatory compliant, and financially viable approaches. The spectacled caiman, native to Latin America, is named after the bony ridge between its eyes, giving it a spectacled appearance. Its leather is prized in global luxury markets for its unique texture and visual appeal. Simultaneously, its meat is a delicacy in certain regions, especially in Asia. Saurios processes the caiman in regulated facilities and adheres to ethical sourcing standards. Their dual product lines, leather and meat, enable diversified market exploration with distinct value propositions for fashion and culinary segments. Juan Manuel and Jorge undertook an extensive global market research journey. First, they gathered secondary data and explored demand trends. Then, they analyzed country-specific regulations, customer preferences, and competition. They engaged with trade consultants, studied competitors, and explored entry mode options including direct export, brokers, and joint ventures. This comprehensive analysis provided both validation of product market fit and clarity on the diverse barriers and opportunities across regions. It laid the foundation for a carefully phased strategy. Saurios identified 4 compelling international growth factors: luxury market expansion. High-end fashion brands, especially in Europe and Asia, seek exotic leather for shoes, bags, and accessories. Culinary demand. Caiman meat appeals to adventurous food cultures, particularly in Hong Kong and parts of Japan. Sustainability appeal. Consumers increasingly demand traceable, regulated sourcing. CITES certification and ethical farming appeal to conscientious buyers. Price premium. International buyers offer 40% to 100% more per unit than local markets, giving Saurios a path to profitability through differentiation. The first and least complex strategy is direct export. Saurios would continue production in Colombia. Caiman leather would be shipped to Spain, targeting fashion manufacturers. Meat would go to Hong Kong, appealing to luxury culinary retailers. This option provides control over production, low initial investment in foreign operations, and faster entry. However, it places significant responsibility on the company for logistics, documentation, and market development. The second option is partnering with an international agent or broker. Saurios remains focused on production. A broker with expertise in European luxury goods would manage market entry and sales, especially into Italy's leather goods industry. This model helps navigate local regulations, language barriers, and buyer expectations. The broker absorbs some risk and adds local know-how, but also takes a share of profits. Trust and alignment in this relationship are critical. The most ambitious option is forming a joint venture with a Japanese company. This would involve co-investment and sharing of responsibilities. It could include localized finishing, branding, and distribution within Japan's premium market. The upside is significant: deeper market access, cultural legitimacy, and long-term brand building. However, this option carries the highest complexity, requiring legal alignment, shared governance, and long-term commitment. Sorios compared 4 potential markets: Spain, high leather demand, medium entry barriers, 40 to 60% price premiums; Italy, very high leather demand and price premium up to 90%, but high regulatory complexity; Japan, medium demand across meat and leather, but very high entry barriers, language, regulation, and partner selection are all critical; Hong Kong, extremely high meat demand, moderate barriers, 50-70% premium. These insights helped Sorios sequence its market entry by balancing potential reward against operational complexity. Each strategy carries significant risks: cultural and language barriers; miscommunication can derail negotiations and branding; regulatory complexity; exporting exotic animal products requires CITES compliance, import permits, and market-specific documentation; financial risks; currency fluctuations and slow collections can hurt cash flow; supply chain challenges; perishable meat requires cold chain logistics, and leather goods need careful handling to avoid damage or delay. To operate legally and ethically, Sorios must navigate complex regulations. CITES certification is mandatory for all Cayman exports. Each market has unique import licensing and quality standards. Contracts must be aligned with Colombian and foreign legal frameworks. Sanitary and product certifications vary by country, especially for meat. Non-compliance risks seizures, fines, and reputational damage. Thus, regulatory strategy is a top priority in their internationalization roadmap. While exact numbers are confidential, Sorios projects Year 1 revenues through direct exports to Spain and Hong Kong with controlled risk. By Year 3, broker-assisted sales in Italy begin to scale. By Year 5, a joint venture in Japan could position Sorios as a boutique luxury brand in Asia. With proper execution, international revenues may exceed domestic sales by over 300%, securing long-term financial sustainability. A phased approach is the recommended strategy. Immediate focus on direct export to Spain and Hong Kong, where barriers are moderate. Within 12 to 18 months, identify and collaborate with an Italian broker to expand into Italy's premium leather market. From Year 2 onward, begin relationship building in Japan for a long-term joint venture, acknowledging the complexity but also the high reward potential. This allows the company to build experience, de-risk market entry, and scale thoughtfully. The roadmap spans 4 stages. 0-6 months. Secure CITES certification, finalize export logistics, initiate direct sales. 6 to 18 months. Develop Italian partnerships, refine marketing collateral, stabilize logistics. 18-36 months. Begin Japanese market research and relationship building for joint venture exploration. 36+ months. Formalize the JV, expand product lines, and consider new markets in the Middle East and North America. Each phase is designed to balance operational readiness with strategic ambition. Sorios stands at a pivotal juncture. There is clear global demand for high-quality Cayman products. A multi-path strategy, direct exports, agency models, and joint ventures, offers flexibility and growth potential. Success depends on regulatory compliance, cultural sensitivity, logistics excellence, and partnership building. With careful sequencing, ethical positioning, and operational discipline, Sorios can transcend domestic limitations and become a leading exporter in the exotic goods market. Thank you for watching the Case Study Learning Series in International Business by Skilled MBA.